Welcome back, everybody. Sive here with forexpeacearmy.com. As usual, let's take a look at the Forex market report. So we have prepared a weekly research as well. Lots of interesting subjects we have touched there concerning the Japan situation, some liquidity issues, alternative data statistics that we've got this week. And, well, actually, we come to the interesting conclusions, but this is not the end. Actually, tomorrow we will tell you more in the gold report. In particular speaking, what stands behind the liquidity issues. Is very interesting nuance exists that put the light, shed light on the overall situation is a bit that looks a bit curious, and you will see what the actual risk stands with. Second is about the Japan. So if Bank of Japan holds almost 50% of the whole national debt, what the problem? So yeah, they could make the netting, close it, and reduce the debt to the gross domestic product ratio. But not everything is simple, and the problem is actually hides in the balances of the Japanese banks. So we also will clarify it for you tomorrow in the call report, which might be very interesting. And actually, based on even these two factors, you will see why the gold market meets so high demand for now. Meantime, speaking about euro currency, we are actually considered some fundamental background and explained why we think that the closer to the summer of 2026, euro could start losing the advantage. This might happen by the few reasons. If you're interested with that, you could read the report. Speaking about the short term, as usual, I will put the link down below in the video. So speaking about the short term perspective, actually, guys, this was really curious week. Not a lot of data, big holidays, low volatility, some curious events with the Chicago Mercantile Exchange issue. So it's a bit curious, but on the market you do not see big changes. So in fact, to be honest, I see only the hourly chart that might be used in some practical moments. So on other charts I do not see something really special. On a daily chart, trend turns bullish, but market still holds this tendency, and nominally it keeps chances for the bearish downside continuation, forming these patterns. But on lower time frames, I explain you why I do not want to sell in this point. Although in general it looks attractive and maybe it even will trigger downside action, but I don't like the price performance here. Yes, this might be just the byproduct of the thin market. It might happen, but we can't ignore it currently. On the 4 time frame chart, I see nothing interesting. Market still stands on the halfway to the neckline. It's trying to complete it. It's just moving here, and it stands on the big trend line that stands on the daily chart. So it's a bit steeper, while on the neckline here it's a bit flatter. Currently it stands for a very important resistance level. And if you take a look at the hourly chart, you will see what really has happened previously. I just remind you that we end our discussion with this minor triangle. And we said keep an eye on what will happen, because that might be the key for the next direction. And initially, it has confirmed the bearish situation, right? So it was really fast breakout. We still have decided to stay aside and see what will happen. But later the situation has changed drastically. So you can see that market has shown the V-shaped reversal and returned back up. So it not just returned back in the triangle, it has shown the breakout in opposite direction. And here it shows really nice acceleration to the upside. As a result, we've got the cartridge triple to buy that has triggered this upward action. Now, taking a bit broader view, you could see that market stands in the upper channel, so rather accurately, and it is forming some larger triangle inside of it, right? But here we have to pay attention to the nature, the structure of this performance. Just recall what the background we have on a daily. Potentially we're considering bearish pattern, which is a free drive, right? Market has completed upside retracement creating the strong resistance area, which is an agreement with XOP target and 618 resistance. For any naturally bearish market, it's more than enough to start downside action. So the market that indeed bearish, it will start and use this combination as a starting point for the downside reversal. But we do not see it here. Reaction on the XOP was relatively small, fast returning back to the top. So this performance doesn't look bearish. So it makes me stand aside right now from any bearish positions. So for taking new bearish positions, maybe everything will normalize and indeed this pattern starts working, market start dropping, but I need to see it. And I need to see that market indeed confirming this bearish scenario. Only after that we could make decision on taking new shorts. Of course you could try to take it, but this will be really very risky. So I don't want to do this. Here is also we have some divergence, but most important is the nature of the price action here. Correspondingly, what we're gonna do here. Personally, I think that we could consider taking the long, even taking the long position. And one of the patterns that we could try to catch is a reverse head and shoulders right on top. So something like this. You can see this fast acceleration retracing down to the 1580. Maybe even slightly lower to the 600 level 5070. It might be a good point to consider taking a long position because risk will be very close. You need to place place your stop just below these lows. It's less than the 30 pips risk. And then we will see what will happen. If we are correct with this bullish performance, then we will get upper breakout. And this breakout will be important. This will be not just some triangle or something. This will be breakout on the daily chart, guys. It might be really upper direction, breaking this channel, out of this channel. So that's what I intend to keep an eye on the next week and beginning next week. So 1570, 1580 area. Consider, maybe it makes sense to drop your time frame to the 5-minute chart, trying to get there some minor bullish pattern as well. This is all now it's technical details. But in general, that's the pattern that I would like to consider. The option here, what you else could do is probably use some stop buy order instead. So for instance, placing stop buy order around the XOP slightly below it, so around 16 or 8 maybe. It's another option. Because in the moment of the breakout here, you will step in, you will buy. It has its own advantages and disadvantages. You probably clearly understands what they are, so I will not repeat it. This is classical approach with the limit order or just watching the position around the 618 support. So that's in short what we have. Maybe it's really a bit tricky in the current situation, not very simple setup to accept, but actually that's the only that I see currently on the euro currency for trading purposes. So if you're conservative enough, I would recommend to not do anything. Wait for a direction. When there's all this mess will be over, you will see either the upside action or you will get the downside breakout. Then you could just, in a quiet situation, to take the position on some pullback. If you still feel some attractiveness on this more aggressive performance, then you could think about this setup. So currently I do not consider any shorts. Two different ways of possible entry in the current situation, either with the classical around this support based on the maybe some kind of the hand shoulder shape, or using stop buy order in moment of the breakout. This also might be considered. So that's all for now. See you, and let's just monitor how it will turn on Monday.